Welcome to Trade Pro. In this video, I'm presenting the new highest profiting trading strategy on the strategy ranking spreadsheet. After so many tested strategies, I was so surprised that this one came out as the new #1 highest ranking strategy for gain on the account over a series of 100 trades. So let's get into the strategy. It's actually one of the strategies presented by these guys over at Trading Strategy Guides. Last time I tested one of their strategies, it was actually one of the worst strategies that I had ever tested on the channel. This time, it is now the #1 strategy. So it seems as though not everything they're putting out there is all that bad. So I'm going to explain the strategy and get into the 100 tests, then go over all the results from the test at the end. So let's start out with the strategy itself and cover the rules with some example trades. Let's start out by going over the basic indicators that you'll need for this strategy. First, the 20-period exponential moving average, as you can see on my chart here, and then the ADX indicator set to 14, which is default on TradingView. You will need to add a 30 line onto the ADX, so you can do that by just selecting the horizontal line tool and plotting it directly onto your ADX indicator. If you're using TradingView, you can then go to the settings of that horizontal line and change the coordinates to 30 so that you have that horizontal line at the 30 level. Now let's get into the actual rules of the strategy, from entry to stop loss placement and take profit. The first step for trading this strategy is waiting until the ADX goes above the 30 line, like we see happening down here. The next step is waiting for the first pullback into the 20-period exponential moving average, like we see right here. One thing to keep in mind is you must not see a close below the 20-period exponential moving average. The next step is to buy when price breaks above the high of the candlestick that touched the 20-period exponential moving average. So for this instance, you would buy at the break of the high of this candle here, which would be right in this area. The stop loss will be just below the swing low of the lowest candle that touched the 20-period exponential moving average. The next step is to trail the stop at the 20-period exponential moving average, but only once the highs are taken out before the pullback had started that touched the 20-period exponential moving average. So for this example, you would start trailing the stop at the 20-period exponential moving average once this candle here took out the high right here. So just to be extra clear, as soon as price crosses this level of this high before the pullback on this candle, you would start trailing the stop loss at the 20-period exponential moving average and continue to trail it until it is stopped out at the 20-period exponential moving average, which would happen up here. For this specific trade, the risk to reward ratio is something like 20-1. I'll put it in here real quick. So we'll see that it ends up being around 23 times the risk for the profit target here. All right, so now I'm going to go through a few more examples, including some short trade setups, so you guys can get a better understanding of the strategy. I'm also going to cover some more important rules that I haven't gone over yet with this strategy. So let's just find the next trade setup here. And it looks like we see that the ADX goes below the 30 level here and then goes back above it. So we'll be looking for the next pullback into the 20-period exponential moving average, which we see happen right here. Now, there's a couple things that we have to make sure of. First of all, that we have an entry that occurs before price has closed below the 20-period exponential moving average. And secondly, we need to make sure that the ADX doesn't go below the 30 level before our entry occurs as well. So both those things are valid here. We see the pullback on this candle touches the 20 period exponential moving average. There's no close below the 20 period. We see the ADX is still over the 30 level. And then we get the entry on this next candle when the high of the pullback candle is taken out. Our stop loss will go below that pullback candle. And then we just need to wait till we either get stopped out on this or the price breaks above the high here. So the high we're going to be looking for right here, it gets broken on this candle, and that's where we're going to start trailing the stop loss up the 20 period exponential moving average until getting stopped out in profit up here, which would give us roughly around a, let's see, 1 to 3.65 risk to reward ratio on this specific example. So now let's go through a couple short trades and then get into the 100 trade test. All right, let's cover a short trade example here where we see that the ADX goes over the 30 level right here on this candle. Then we wait for the pullback into the 20 period exponential moving average, making sure there's no close over the 20 period exponential moving average. Then we short when the low of the candle that touches the 20 EMA is taken out with the stop loss over that touch candle. Then we wait to start trailing the stop loss once price breaks the low of the beginning of the pullback before the touch on the 20 EMA. So right here, we're looking for the breakdown. Then we start trailing the stop loss down here where the profit would be taken at around 1.3 times the risk on this specific example. As you can see, price goes back up over the 20 EMA right here, which would take out the position and close. Now let's look for another short trade example. All right, final example before getting into the 100 trade test. So on this one, we see that the ADX goes over the 30 level here. So we start looking for that pullback into the 20 period exponential moving average, which we see on this green candle right here. The entry is when price breaks down below that first 20 EMA touch candle. Stop loss goes over the highest wick that went over the 20 EMA. And remember, we don't start trailing the stop loss until price breaks below the low before the pullback. So right here on this example, which happens down here. So we start that trailing stop loss, and the position would be stopped out in profit on this green candle that went over the 20 period EMA. So right around here, giving it around a 1 to 0.93 risk to reward ratio. So not even a 1-to-1 on this specific example. All right, so that is all the trade examples. Obviously, I chose winning trades, but you'll see the overall results over a series of 100 trades after I get through the fast forward. Now let's get into it. All right, the results are in after the 100 tests, and we have a new first place holder on the strategy ranking spreadsheet, and by quite a large margin too. So this is now the champion for having the highest gain on the account over a series of 100 trades. Now let's go over the results here. So this was tested on Tesla on the 1 hour time frame using a variable risk to reward ratio with a trailing stop loss method. And it did take 11 years of price data to find those 100 trade signals. So I believe this one took longer than any other 1 hour time frame test to achieve the 100 trades. So you're going to have, not very many trades to capture. Of course, we're not testing for time, we're testing for quality. And over a series of 100 trades, this one made the highest gain on the account. So if you wish to get that gain on the account in a shorter period of time, then you can try adjusting for a lower time frame. But we're just trying to find a quality strategy and not just a 1 minute time frame strategy that's going to spit out a ton of signals. So now let's get to the winning trades. 46 out of 100, and losing trades 54. The most wins in a row, 3, and the most losses in a row was 4. The gain on the account of risking 1% of the account equity per trade, not compounding, 121.87%. So 41.87% higher than the previous first place holder on the strategy ranking spreadsheet, which we'll check out in just a sec. The winner's total gain, when you have not subtracted the losses yet, was 168.82%. So the average winner's gain on the account was 3.67%. It's worth mentioning that there were 4 huge wins of 18 times the risk, 17 times the risk, 22 and 21 times the risk. But even without these really huge winners and these outliers, the performance was still very good. So definitely shouldn't be discounted based on these big winners, although these did really push it over the top with that gain on the account figure. But again, definitely shouldn't be discounted. As with any trailing stop loss strategy, you're going to have a few really big winners along the way that really bring the strategy and the gain on the account to the next level. Taking a look at the losses, 46.95% down on the account from the losses, and it's not 54, even though we have 54 losing trades, it's not minus 54%, because some of those losses, even though risking up to 1% per trade, the trailing stop loss minimizes some of those losses. So you can see the average loss was actually 0.8694%. All right. So that's why it's not minus 54% for those 54 losing trades, just because that trailing stop loss sometimes does minimize the losses. So those are the figures. Very, very good results out of this one. So let's head over to the strategy ranking spreadsheet and see where it lands, although we already know where it lands. Just have some final words on it. All right, here it is on the strategy ranking spreadsheet, falling at spot number 1, of course, taking over. After the previous holder of the first place spot was there for so long, I really didn't think that something would come along that is just so simple and dethrone it like this. But at 121% gain on the account, I'm not sure we'll see something able to achieve those same results over a series of 100 trades. Although, of course, you can get those results much faster using something else, as this did take 11 years of price data to achieve those 100 trade signals. Of course, there's probably going to be lots of people trying to modify this and use it on lower time frames, so I encourage playing around with it, doing a lot more back testing. As always, 100 back tests is not even close to enough to determine a strategy's long-term success or failure. You need to forward test, demo trade, test thousands of times before you are ready to take it onto a live account. So we'll mess around with the strategy, get something good, use all of these strategies and backtest videos as ideas in creating your own great trading system. Now, go through the process properly, do it slowly and deliberately, put in the hours of work that it requires, and maybe you will come up with a good long-term successful strategy for yourself. All right. Thank you guys for watching. Hopefully you enjoyed the video. I'm going to give a quick shout out to my affiliate Capitalize.ai here. Capitalize allows traders to create and automate their trading strategies just by typing them out in plain English, no coding knowledge required. You can simulate, backtest, and deploy strategies all from your phone and all for free. Check out the link in my description down below if interested. Thank you and have a great day.